It's Sunday, the 17th of January 2016. This is a chart of the ASX200. It's a weekly chart. Obviously, it's been a pretty bad couple of weeks on the ASX200 and on all other world markets. But just this week, we really broke down through some very important resistance levels, or formerly support levels, which now look to have turned into resistance levels. So you can see this lower trend line here that's been hit 3 times, and again in August, back from the 2009 low. And this 5,000 or 49.50, 5,000 sort of level that had been bouncing off the last few months. And this week it's really broken down decisively through those levels. And the Friday action on the US market is down another 2.5%. So I'd expect on Monday the ASX 200 could easily drop another 50 to 100 points conservatively, I think. If you look on the daily chart, Friday's action was in particular was very poor. So it broke down through those levels, and it's been coming back and trying to test this area again and getting massively rejected, especially on Friday. There was about a 90 to 100 point turnaround. It was up about 80 points in the morning and it closed lower. So that's a very bearish sign. What I wanted to talk about was sort of the long-term nature of this chart and compare it to this 2008 sell-off and eventual crash. You can see that what we had in 2008 is what you'd call a 3 declining peaks formation. And you can see we've got one there, and again here, and again here. And this is one of the more successful chart patterns, I guess, the highest probability chart patterns, and you often see it in a topping pattern. Basically, once it breaks through this low at the third peak, if it breaks through that low, you're looking to repeat the range of the 3 peaks. So you should see a repeat of this arrow here. And you can see that's actually exactly what we had in the in 2008, 2009. So obviously we've got a very similar formation at the moment. Not quite as lofty heights as 2007, but we've got 1, 2, 3 peaks here. And in particular, this third peak, you can see that in 2008 there was a lot of jostling around this 5,000 area before it eventually broke down decisively. And we've had exactly the same sort of action at the moment. So when on Monday when ASX 200 opened, we could easily go back and 4800s come into play, I think, quite easily on Monday. So you could, that's a downside scenario if we're looking at a repeat of this range. If you look at Thomas Bukowski's book, he's got a lot of data on these sort of chart patterns, and I think the 3 declining peaks doesn't necessarily have the highest. It doesn't always reach the low. Compared to a lot of other chart patterns, it's sort of a lower probability of actually completing this move. But once this downside break is extremely bearish, and I'd expect there's not a lot of obvious resistance levels in here, obvious support levels. You're probably looking at this low around 46.50ish, and there's a bit of support there. So that's a potential level as well. But at the moment, it's looking extremely bearish. A lot of the other sector charts, I know the financials index on the ASX 200 is also looking pretty poor, and I guess that's what's been supporting the market for the last 12 to 18 months with the resources and energy stocks getting smashed. So those sectors really need to keep the market up. Otherwise, there's a lot more downside in this market at the moment, and I think people are starting to realize that at the present time.